Hi, everybody. I'm Lucas, the head of xExchange, and I'm super happy to host this panel about bridging the gap between DeFi and traditional finance. We are very fortunate today because we are going to discuss with 3 DeFi and traditional finance experts here. Our first guest is the co-founder of Osmosis, the leading decentralized exchange of the Cosmos ecosystem that has reached a record high of $2 billion of liquidity. He is also a key contributor to the Cosmos SDK. Please welcome Sunny Aggarwal. Our second guest is the founder of Stake Capital Group, an investment fund run by DeFi pioneers that has invested in more than 40 DeFi projects, among them Curve Finance, Lido Finance, 1inch, and many more. He is also the creator of Rect, the news journal of reference in the crypto space. Please welcome Julien Bouteloup. And our third guest is the founder and CEO of Meria, a multi-chain crypto assets investment platform that proposes custodial and non-custodial investment solutions and that manages more than 200 million euros of assets. He is also the creator of the YouTube channel Asher, the most known cryptocurrency YouTube channel in France. Please welcome Owen Simonin. Thank you very much, guys, for being here. It's really a pleasure to have you here. So, I will start maybe by saying how great DeFi is, because I think that all 4 here, and probably many of you here, are true believers in DeFi. And we surely love the powerfulness of DeFi, the decentralization of DeFi, and the permissionless aspect of DeFi. So I'm going to go fast forward on this topic because I know we all agree on these aspects. The thing I would like to discuss is more the gap between DeFi and traditional finance. And my first question for you guys will be, on which fronts do you think traditional finance is ahead of DeFi? Or said differently, on which fronts do you think DeFi needs to catch up? Sunny, would you express yourself first?
Sure. So I was on a panel like an hour and a half ago, so I might come off a little bit repetitive, so sorry about that. But no, I think the 2 big things, one is definitely on the user experience. I think that like onboarding into DeFi is just like such a painful process. 2 weeks ago, just for some user experience testing, I asked one of my friends, he's a software engineer at Robinhood, so like technical, fintech. I gave him a job. I told him, buy $10 of Maker on Uniswap. And I'm like, figure out how to do it. It took him over an hour to figure out how to do it. And it's like, this is not an experience, like the onboarding experience that makes sense, right? So I think we have a long way to go in that onboarding, and that's one. And then the other, I think, is the privacy side. The privacy side, where today, if you're trading on any decentralized exchange, right, you're basically you have all this MEV that's happening because the mempools are public. You have the chain. Everyone's leaking their trading strategies. Like no sophisticated trader is gonna be okay with that, right? They don't want to see that. You have like Dune analytics, and some people see that's a good thing, but it's like really traders are like, no, I'm not. I'm like giving away my trading strategies when everyone can track me like that. So I think we need to fix the privacy as well.
Okay, thanks. Julien, I know that you invest in many projects. Regarding this simplicity and user experience and privacy, is it something you look into?
Well, I think user experience, it's of course it's an existing problem, but for me, the biggest problem is the liquidity. In traditional finance, we have by multiple order of magnitude the liquidity that you can find in DeFi. And also, when we say like user experience, most of the project that you see in the space, I would say more than 98% of the project, they don't actually focus on the product. They focus on the fact that they are using crypto or blockchain. But at the end of the day, the user, they don't really care if you're using blockchain or crypto. What they care is that is the product that you are trying to sell to them, solving a real problem to them. And that's a major issue. And I would say that on the scale to 0 to 1, on every different angles that DeFi, traditional finance, all finance can be built on, I would say traditional finance still winning the race in all those different angles, except maybe the decentralization and the accessibility. But decentralization today is still very centralized, and accessibility, of course, DeFi is more accessible for most of the people in the world than traditional finance. You can access exotic and very complex products that in traditional finance will require to be KYC, AML, or to have sufficient understanding of the concept in order to use them. So it's more difficult.
Okay, and Owen?
Yeah, I think you have 2 points of view when you are thinking about accessibility. Because yes, it's accessible because decentralized finance is permissionless. Everybody can access to the decentralized finance, but it's not accessible because it's too complex. Today, the problem of DeFi, it's also a problem of liquidity, as Julien said, because you need to reach a critical mass adoption to work with a very important protocol of decentralized finance. And for that, you need to have people educate to become a liquidity provider. You have to explain what is a liquidity providing token. You have to explain what is an impermanent loss when you have different volatile token inside. You have to explain how you can use it, how you can compound it in another kind of protocol. And basically, you also have to understand every basic skills of cryptocurrency, holding your private key, having access to a decentralized custodian wallet, etc., etc. And everybody is not a financial investor. Everybody is not able and prepared to understand this different kind of concept. So I think it's very important, but sometimes I'm just thinking that we can't just compare decentralized finance and centralized finance because the proposition of value is not exactly the same. And by definition, decentralized finance, it's different kind of financial product. Today we have in mind DEX, we have in mind loan, insurance, but it's a base product of finance. And I think people like Julien or Sonny are building the next step of centralized finance product and not only these basic needs. So the comparison between the development of both finance and decentralized finance are complex because it's not only a question of volume. And basically, if you need some tool of decentralized finance because you have no choice, because you don't have a bank account, because you don't have access to loan, at this moment, yes, you will go through this different complexity barrier because you don't have the choice. You understand what is a private key, and you will find a solution to become a liquidity provider.
Okay, so you are saying that basically right now I'm kind of, the people that go through it are forced and they need to have the patience to go through, and this is a big difference.
Yeah, and sometimes decentralized tools are just an evolution of another kind of tools that can find the centralized finance, and sometimes it's a real revolution because glad to the decentralized finance, you have no access to this solution.
Okay, and what is your perspective on this? Like, do you think that on these points, for example, DeFi will catch up with traditional finance, or you think that fundamentally it will stay behind? Julien, maybe first.
Well, I truly believe for the success of DeFi is not DeFi to replace traditional finance, but it's traditional finance to use, adopt, and solve existing problems using the technology of whatever we have built in decentralized finance. So securitization of assets, accessibility, and all those type of different problems that we have solved in decentralized finance are super useful in traditional finance, and they should be used there. So people saying decentralized finance will replace traditional finance, I don't really believe so, because traditional finance is an existing system, it's big, it's robust, and it does a lot of different mistakes. But in terms of order of magnitude, it's by far way bigger. So for us, in order to continue existing and making progress and shipping this technology will need to be used by some of the biggest players in the world. There's no other way. So banks will still be there, but instead of using centralized order books, they will use blockchain. But at the end of the day, if you want this technology to be successful, people will never realize that they're using crypto or blockchain. It's the same as today. When you're using internet, you go surfing the web, you use HTTP, but you don't say, oh, I've built this project, it's using HTTP. No, in Web2, you don't say that. You focus on the product. It's the same when you send SMS. You don't say, oh, I'm using this really nice software that is based on SMTP. You never mention the protocols. So this is what we're moving into. There's multiple different phases because we, at the moment, building the technology. But this technology will be useful if it's used and powering some of the biggest players in the ecosystem today.
So basically you are saying that we should really focus on the use case, like what the value proposition we are giving, and blockchain is just a tool, and probably there is no debate between traditional finance and decentralized finance. There is debate about finance and services we propose, and companies will figure out what are the best tools to use, right? Okay.
At the end of the day, DeFi and CeFi is the same.
Okay.
They all CeFi, they all finance. It's just a matter of which tool you're using to achieve the mission. So if the mission is to have something that is fully decentralized and accessible to most of the people, then of course products from DeFi are mostly useful. But sometimes you need full custody, you need full centralization of power because certain aspect of the product is what it is. So yeah.
Okay, I've seen you approving a lot. Anything to add on this topic, or you approve very much with what Julien said?
No, I think I have.
Okay, great. One thing that struck me in traditional finance is how inexistent governance votes are. For example, Apple or Google or Amazon, they never do governance votes. But in DeFi, governance votes are frequent. I won't say that every project do it, but it's very frequent in the DeFi space. And my question is, why do you think that governance votes are more prevalent in DeFi than in traditional finance? And Sunny, you come from the Cosmos ecosystem, which takes governance very seriously. So I would be very curious to hear your thought about this.
Yeah, one of the reasons I got into blockchains in the first place was I was like studying computer science and political economy, and I was like really fascinated with the, blockchains as being places where you can quickly experiment with like political economic systems. I think that like typically like creating new governance structures is a very slow process, and like, but with smart contracts you can just like run these experiments both on like economic side. We tried different types of stable coins. We tried different types of we tried different types of stable coins. Some of them collapse, some of them work. We learn a lot about economics, but then I think on like governance, we want to try different things, and we're learning a lot about them. I'm like really excited about like what Maker is doing with Endgame and like kind of like using prediction markets for governance. I think, and I hope that Cosmos, we can act like a platform for this sort of experimentation. In the Cosmos Hub Genesis file, just as in Bitcoin's Genesis file, there was the headlines from the Times that day. It was Chancellor on brink of second bailout of banks. In the Genesis file of the Cosmos Hub, there's the same headline from the Times that day of the Cosmos Hub launch, which is Brexit vote must be put on pause, MPs warn May. And it's like, for me, that was always significant because it's like, okay, I saw Bitcoin as this like revolution in finance, and I see Cosmos as this like revolution in like governance experimentation. You can have your own blockchain that has governance at the center of it, and you can like experiment with what you want to do with that. And so, you know, I think one of the value propositions of Atom, if I had to give a one line, is it is the most decentralized governance token in all of crypto. I don't think there's any other governance token that comes close. Bitcoin and ETH are probably more decentralized, but they're not governance tokens. And I think there's a lot of value in like building a capital asset that has governance at the core. You know, Bitcoin and ETH have their own monetary policies that they follow, which I think are very interesting. Bitcoin is digital gold. I think ETH is the petrodollar, but I think Atom has this like ability to become the like decentralized central bank, use governance to do things like active monetary policy, open market operations, like liquidity inject, like protocol-owned liquidity, all these sorts of things. So I think the direction of like governance experimentation is one that is for me the point of crypto.
Okay, thanks. Julien,
I would say, like you said something that Apple or Facebook and those big guys are never going to governance. It's actually not true. They always go on governance, but it's governance that you never see. And that's the difference in DeFi. We have built what we call first accessibility to decision makers, policy makers, because this is what governance is. And we see and we can participate in those decisions on a public channel. But in traditional finance, you have VCs, you have shareholders, you have founders, you have existing members, and all type of directors and etc. And those guys, they make decisions. The fact that they raise the shares or print more shares, it doesn't come out from someone waking up in the morning and pushing a button. It goes through spreadsheet and different type of data. For example, today was announced that Netflix is increasing the share value because they have been having some good P&L, whatever. So yeah, it's a lot of governance, but you never see those governance. It's hidden by a group of people that only themselves have access to those type of different features. What's unique and revolutionary in this space is that for the first time, we have built something that anyone can participate. Anyone can wake up in the morning and say, okay, I will build a landing page that will attract delegates, voting power, and the next day I can have 10% decision maker in one of the biggest protocol in a space. It's truly unique. But then by decentralizing and making this powerful feature, because lobbying is way more powerful than money, then you also end up, that's what we say, like with power comes consequences. So this is where then you end up with chaos and a lot of different shit show and different things happening in DeFi that we mostly cover in Rect News come from the governance space, because we need to educate and we need to learn how to play with those very powerful tools. I think we made one of the biggest mistakes in this ecosystem. That was like 5 or 6, 7 years ago. The beginning with Cosmos, Tezos, Ethereum, and multi-chain and different things like that. That we believe we understood the concept of governance. But civilizations, centuries over centuries, millennium over millenniums, took them ages to understand governance. And we thought that in a time frame of 5 or 10 years, we masterized governance. But then today, guess who? Or give me a name of someone mentioning that he's building a DAO. No one is mentioning that they're building a DAO. Completely disappeared, this concept. Now this DAO is under the hood, powering the technology, but no one actually mentioned the concept. So it's tough concept, it's difficult, we're learning about them. But yeah, governance exists in traditional finance, we don't have access to it. In DeFi, we have full transparency, but then came consequences.
Okay, so, yeah, Owen, you wanted to answer?
Yeah, and I really think it's important to continue to increment and to try these different kind of model. And I also think sometimes we have biggest problem in decentralized finance governance than in centralized finance. Because as Julien said, the governance exists in this biggest company, and it's a very important key point. And the fact that you can take a decision very fastly, it's very important in your strategy. The problem of big company, it's the company is leaving an horizontal model to a vertical model. And at this moment, you can lose, because of your process, you can lose your agility. The problem sometimes of decentralized finance is the fact that every user is not able to have a good idea and a good point of view in a technical proposition. Sometimes technical, sometimes financial, but everybody is not with the right skills to take this decision. And that is the first point. And the second one is basically also in decentralized finance, you can buy this right to vote. And basically, when you are the little fish of the room, you have to play the music of the whale. That's why in decentralized finance or not, you can have a re-centralization of the governance and you can see the same model and the same problem of centralized governance sometimes. That's why I think it's also important to try different kind of decentralized model. And one day I hope find the best, typical model efficient for decentralization.
Okay, very interesting. So basically, we have more tooling to do governance, but figuring out the correct way of governing is still something to work on, if I understand correctly, right? Very interesting. Another big difference between DeFi and traditional finance is regulation. That's a point we have to discuss here. DeFi is way less regulated than traditional finance right now. Do you think DeFi should be more regulated, should be as regulated as traditional finance? Owen, I know that Meria worked hard to follow the French regulation. What is your opinion on this subject?
It's impossible to have a perfect answer to this question because that will depend on how the regulation will be applied. But for totally decentralized point of view, it's always too much. And for the actual regulator and banks, it's always the Far West in the cryptocurrency world. So it's complex to answer. I think we have to find some average solution, average answer to this kind of this problem. But for the moment, for the DeFi, it's really early. For example, the European regulation, MiCA, coming at the end of 2024 in December, is not talking about DeFi for the moment. That will be about MiCA 2. And for the moment, we have not the detail about DeFi, and we have not the detail about when MiCA 2 will be applied. And I think it's a good thing, because we need of this period, to try and to continue to increment and to discover different ways to use DeFi to create beautiful, useful tools before creating the framework and to say what is legal or not. But sometimes in different countries, we're still starting to have some discussion about making a complete KYC about every and behind every single public key. And I think that is dangerous because it's more than a regulation. It's a way to keep the control about this decentralized world. And I think that will be the limit of the regulation of the DeFi.
What do you think are, because in traditional finance there is a KYC for each user, but it doesn't seem to be an issue. Why in DeFi?
It's complex because you need to have some KYC sometimes to understand who is behind the financial flux. It's important in case of money laundering, financement of terrorism. It's important, but for 99% of people, they are not using blockchain for this kind of thing. And basically at this moment, blockchain is a powerful tool of traceability. We can now, who are behind the address, we can understand everything about financial habits, financial preference, and that is a very thin and very accurate information about your person. And I think that is complex because we will have to find a solution for the regulation in DeFi, but that will be a tricky question because no perfect solution exists. It's always the same thing. A regulator having your identity and not abusing about it, it's a cool thing. But basically, the people getting the power want to use it at one moment.
I think this was the case a couple years ago, but this year in 2023, now with concepts such as zero knowledge proof, I think we pretty much killed the game in that aspect. So now it's more about us building tools that will use zero knowledge proof identity mechanism where you can use a wallet that is KYC AML, but you don't actually give away your identity or personal information, and you can use DeFi. Because at the moment, the way DeFi is built is the way we understand how finance works or how society is built on. We have limited understanding of those concepts for security-wise, for regulation-wise, for microeconomy, micro and microeconomy. So I think it's our job to build a technology that will satisfy guidelines and regulatory framework. Some people don't wake up in the morning just for the sake of screwing everyone else, or just for, oh, I will just crash this because why not, you know? There's reasons behind. Of course, on our side as builders, we always interpret them as bad because they go against our productivity, scalability, and whatever. And it's always limitation to the amount of things we can do. But there's a reason why some people on the other side build those things to protect and also sometimes to really be annoying, but this is what it is. But on our side, we have the technology, and if we are not able to answer those different problems with the technologies, then it means we don't control the technology. We don't have a good understanding of the thing we can build out of this powerful technology. But if we give the tool to those guys, and also a lot of education, because sometimes we have the tool, but they don't necessarily understand the tool that we have built. But zero knowledge proof, secure enclave, account abstraction, being able to give authority for a third party to be able to either not control but manage your funds in a security, so for retail don't lose money. All those different concepts, especially this year or last year, we made a massive step towards success, bringing DeFi in TradFi, or actually making sure the things that we're building are safe for the people. Because if you look at Rect, many people lost money in DeFi, but on the scale of TradFi, they lose more money. But this is not the game here. It's not trying to fight who's losing the most money, you know. But I'm sure we have tools, sufficient tools today. We made like a huge step towards technology, understanding of mathematics, in order to bring those tools in the game to make them happy. Not happy, but to actually compliant with society.
So you have a positive view on regulation, and I guess what you were saying, Owen, is that right now, if we add KYCs, and because there is no privacy, might be very dangerous, but with new technology, for example, zero knowledge proof, we can have this privacy that also allows to have a KYC and so the regulation, right? I mean,
of course, like KYC in full public space, this is very bad. And you don't want to have your credit score, you did something, you didn't pay your rent, and then the next day you cannot take public transportation or whatever. This is crazy. So, yeah, KYC AML in public spaces, no, because this is Big Brother and everyone knows what you're doing. But if you add this technology, zero knowledge proof, then yes, it's nice.
Very interesting. And regarding governance, Sunny, because also I guess KYC, if you want to have on-chain governance, is pretty bad. It's like you vote for your president, but your name is public, I mean, I guess. And is it a problematic you have also thought about in regard of governance? The question, yeah?
Yeah, I mean, yeah, I think privacy is very important when it comes to the governance, right? You don't want everyone to be able to see who's making what votes. It like leads to a lot of like social pressure and stuff that I think is like unhealthy and like doesn't lead to like good governance decisions, right? You let the mob control happens, right? And we've seen this happen in Cosmos actually before, where, you know, the mob just takes over, and anyone who votes against the mob, it's like they get socially shamed, right? And it's like, I think having that private voting is very important for that. And then I think there's also actually very interesting stuff in the other direction of like where the role of governance in privacy. So like one of the things that we're like exploring right now is like having like private transactions on Osmosis, but giving the ability for governance of the chain to choose to decrypt specific flows, right? If North Korea put $4 billion through, I think governance of the chain would probably want to help decrypt that, right? It is in it, and even the threat that the governance can decrypt things that governance treats as moral hazards will probably prevent people using it in those ways.
Okay, you won't know.
Because in the concept of zero knowledge proof and using anonymous addresses, but then tax force authority, if they find something strange about some transaction, they can challenge this address to reveal who's behind this activity and to reveal what's behind those different transactions, but in very isolated manner. So meaning that they can actually challenge anyone, but only if you have a legal authority or judiciary authority that they've been making some investigation and they believe there's something strange going on. So we cannot go outside of the legal framework. I mean, the criminal framework. This is the whole concept. You can be anonymous. I mean, anonymous like in a zero knowledge proof aspect, but always be challenged by authority to prove what type of transaction you've been doing if they believe something strange happened.
The network and the users can refuse the authority demand
Well,
to
if someone
challenge this
refused,
or not?
someone refused to give like proof that this type of activity is not wrong
Yeah.
in a very isolated manner, then it means it's wrong.
Okay, yeah, okay.
Okay, thanks a lot, guys. It was extremely insightful conversation, and it was an honor to have you here. And thank you very much to all of you for your attention. Thank you.
Thank you.